Hello and happy March, everybody. This is Tom and Jim giving you a market minder here of had some headlines and market volatility, and we thought we'd reach out and let you know what we're thinking. And what most people are focused on as investors right now, it seems like talk of tariffs, and we'll call it tariff turbulence. Certainly, we have a new administration with new policies. They're moving real fast in a lot of different directions, and folks are concerned. Investors are not sure exactly how it's going to play out. And for that reason, we're probably seeing the extra volatility in the markets. We're not too surprised by it. I believe in January's newsletter that we had sent out with our year ahead outlook, we talked about how we'd had some very smooth sailing in the last couple of years with very little in terms of market corrections. And we expected that this year would see more volatility. And certainly we're getting that here as we start the first part of the year. In fact, in the last few weeks here, we've had about an 8% decline in the S&P 500. So far, it was down about 2% year to date through the middle of the day here on Friday. And an 8% drawdown is more than we ever had for all of 2024. So the good news is these drawdowns typically lead to the next rally, and they're fairly common. And Jim can kind of go through the history of market drawdowns in the next slide.
Thanks, Tom. Yeah, since we had such a smooth 2024, a lot of people have kind of reached out saying, what's the deal with all of this volatility? And they're totally right. The volatility has picked up. It seems like there's a new announcement every day. One day stocks are up, the next day they're down, the same day they're up and down. Lots more volatility than we've seen in the past. But I would say that it's not totally out of line with history. You know, the title here is Markets Move, but it's nothing new. In fact, as this chart illustrates, you have a 5% decline about once a year, a little bit over a year, you'll have a 5% decline. And about every 1.5 years, you have a 10% drawdown or decline from the peak. Every 2.5 years, you have a 15% drawdown. Every 4 years, you have a 20% drawdown. And luckily, only once every 9 years or so do you really have a 30% drawdown. So markets are moving, but it's nothing new. And I guess I would say the good news about extra volatility is it does give you an opportunity. So this next chart here shows the CNN Fear and Greed Index. What it does is it really tries to look at different components to measure what are the emotions in the stock market right now. It can go from extreme fear on the far left-hand side to extreme greed on the far right-hand side. And maybe not surprisingly, given all the uncertainty in the markets, we are now in extreme fear zone, which actually, when you're looking for good future returns, that's a good time to be investing when fear is high and there's extreme uncertainty. That's when you can get some good discounts, buy some high quality stocks or investments at a better price than what they were just a few weeks ago. So we say, the fear runs high, but does that time to buy? We'd say so. And as you can see, we've been using this as an opportunity to put some extra cash to work in some investments. And we're not sure how long it's all going to play out. It could take a few more days or weeks, or maybe we've already seen the low for this correction. No one knows for sure. So we'll just continue to be opportunistic here. Tom, anything else you'd like to add?
I just say there's never the same reason why stock prices decline. There's always different reasons. And as long as I've been in the business now over 40 years, that there's never zero uncertainty. There's always uncertainty, and things come out of left field, and sometimes can jolt investors temporarily. But we're confident that over the next few days and weeks that this correction is mostly over with, and it'll be a fun spring and summertime for investors. So we hope that helps relay what we're thinking and how we're thinking. If you have any questions or concerns, please feel free to reach out to us. We'd be glad to chat. Thanks.
Thanks, everyone.